Not the Federal Reserve, not Congress, not even the White House. The mechanism that actually runs the world economy doesn't appear on any map, and you've probably never heard its name. So who are they? Are they really the ones determining everything from the credit card in your pocket to the rent you pay? And why is 99% of the American people not even aware of their existence? What if I told you that the dollar you use every day isn't actually the dollar created by the Federal Reserve? What if I claimed that most of the money traded every morning on Wall Street, funded by Silicon Valley, borrowed by the farmer in the Midwest, is shadow dollars? This isn't a conspiracy theory. This is written in the reports of the Bank for International Settlements in Basel, hidden in the Federal Reserve's own documents, and a truth that everyone at the top levels of Wall Street knows but no one talks about. Don't think of this as just an economics video. This is the real story of why your paycheck shrinks every month and why your purchasing power keeps falling. If you're ready to truly understand the invisible face of money and the game behind the curtain, let's take attendance by liking the video and begin this deep journey. In this video, we're going to unravel the invisible empire behind the dollar. You think you know how the American monetary system works, but this video will make you forget everything you thought you knew, because the truth is very different from what's taught in economics classes. Yes, the Federal Reserve has the authority to print money, but the real story doesn't start there. The real story lies in the trillions of dollars created outside U.S. borders, in a system that American banking regulations can't reach, that the Fed can't oversee, that Congress doesn't know about. This system is called the Eurodollar. And don't let the name mislead you, because it has nothing to do with Europe or the euro currency. What you'll understand today is this. Most of the dollars circulating in the world weren't created in America. They're not under the guarantee of the U.S. Treasury. And if this system collapses, the 2008 crisis will look like child's play. From the oil company in Texas to the investment bank in New York, from the tech giant in California to the pension fund in Ohio, everyone is inside this system, whether you realize it or not. It all began during the darkest days of the Cold War, the mid-1950s. The Soviet Union faced a serious problem. They had millions of American dollars, money accumulated from oil sales, gold trade, international transactions. But keeping these dollars in New York banks carried the risk of Washington waking up one morning and freezing these accounts. The solution was simple but revolutionary. The Soviets withdrew their dollars from New York and transferred them to banks in Paris and London, particularly to a bank called Banque Commerciale pour l'Europe du Nord. This bank's telex address was Eurobank, and from this word, the term Eurodollar was born. Here's the irony. The dollars that communist Russia tried to hide from the U.S. created the most powerful financial weapon of the capitalist world. London bankers didn't miss this opportunity. They didn't just store these dollars, they started lending them, multiplying them, building a new parallel monetary system. By the late 1960s, the offshore dollar market had reached $70 billion. But the real explosion was yet to come. August 15, 1971, Camp David. President Richard Nixon appeared on television and made the historic announcement. America would no longer give gold in exchange for dollars to foreign central banks. The Bretton Woods system was effectively ending. Nixon called it a temporary measure. Yet that temporary measure has now lasted over 50 years. History has shown us this repeatedly. In the vocabulary of governments, the word temporary usually means forever. Do any temporary taxes, rules, or laws that became permanent come to your mind too? I'm sure they do. Write the examples you think of in the comments. Let's see together how governments play this word game. This decision seemed simple on the surface, abandoning the gold standard. But its real effects went much deeper. Now the dollar's value was based not on the amount of metal stored in gold vaults, but entirely on trust. And a new mechanism was needed to sustain this game of trust. This is where oil came in. 1974. A secret agreement was signed between Saudi Arabia and the U.S. The details of this agreement remained secret until 2016. When Bloomberg News uncovered the documents under the Freedom of Information Act, the world learned the truth. Saudi Arabia would sell all its oil only in exchange for dollars. In return, the U.S. would provide military protection and arms sales to the kingdom. The Saudis would also invest their oil revenues in U.S. Treasury bonds. The petrodollar system was born. This arrangement guaranteed that the dollar would remain the global reserve currency even when its link to gold was severed. Every country that wanted to buy oil in the world first had to find dollars. This created constant demand for the dollar. The U.S. became able to live by borrowing from the world because everyone needed dollars. But there was another invisible layer to this system, and that layer was the real center of power holding the entire structure together. Now pay attention, because what I'm about to tell you is one of the darkest corners of finance. The Eurodollar system isn't simply dollars held abroad. It's a massive mechanism that can create dollars outside of America's control. When a normal American bank issues a loan, it must comply with the Federal Reserve's required reserve ratios, meaning it can't lend out every $100. It must keep a portion in reserve. But a bank in London, Singapore, or the Cayman Islands isn't subject to these rules. These banks can take dollar deposits and, using those deposits as collateral, issue far more dollar loans. And these loans can turn back into deposits and be lent out again. The result? An infinite money multiplier. At its peak before 2008, the Eurodollar system was 87% the size of the U.S. banking system. Today, the estimated size ranges between $13 and $15 trillion. This figure is more than half of America's annual GDP. According to the Financial Stability Board's 2021 report, the U.S. shadowbanking system alone reached $44.72 trillion. That's 194% of America's gross domestic product. So who runs this system? The answer is disturbingly simple: no one and everyone. Do you remember the LIBOR scandal, one of the world's biggest financial scandals that emerged in 2012? Giants like Barclays, Deutsche Bank, UBS, and Royal Bank of Scotland were found guilty of manipulating global interest rates. These banks were adjusting the LIBOR rate, which determined the price of trillions of dollars in derivative products, to serve their own interests. A message from an RBS trader made it into court records. There's a cartel in London now. Another trader wrote that moving LIBOR by 1 basis point made a few $1 million. As a result of the scandal, banks paid over $9 billion in fines. But the system didn't change. Only its name did. Here's why this matters. LIBOR formed the foundation of $350 trillion in derivative products worldwide. It affected everything from mortgage rates to corporate loans, from municipal bonds to student debt. And this massive structure's reference point was determined by phone calls between a handful of bankers. Another pillar of the shadow banking system is the repo market. Repo stands for repurchase agreement. Let me explain briefly. A bank sells a bond it holds to another bank and commits to buying it back the next day at a slightly higher price. The difference in between works like a short-term loan. The problem is, this market sees trillions of dollars in daily transactions, and in 2008, this exact market collapsed. When banks stopped trusting each other, the repo market froze. Lehman Brothers went bankrupt because of this. Bear Stearns was sold to JP Morgan because of this. What did the Federal Reserve do to solve this crisis? It pumped unprecedented amounts of money. But here's what matters. If the Fed couldn't even handle the crisis in its own country, how can it control the Eurodollar market abroad? The answer? It can't. During the 2008 crisis, the Fed had to open swap lines with foreign central banks. It gave dollars to the European Central Bank, the Bank of England, and others so they could provide dollars to banks in their own countries. This temporary arrangement became permanent. Now, foreign central banks have the capacity to create dollars on their own balance sheets. Think about it. Institutions over which the American Congress has no authority, that no elected representative can hold accountable, can produce America's currency? Wall Street's relationship with this system is complex. New York's big investment banks are among the most active players in the Eurodollar market. Goldman Sachs, Morgan Stanley, JP Morgan Chase all have massive operations in London, Hong Kong, and Singapore. These operations function outside U.S. regulations. Most S&P 500 companies use offshore dollar financing. Cheaper, more flexible, less regulation, but also riskier. The bond market is the lifeblood of this system. The U.S. Treasury borrows by selling bonds. Foreign investors, especially central banks, buy these bonds. This cycle sustains the dollar's global dominance. But there's a problem. America's total debt has exceeded $37 trillion. Interest payments have nearly reached $1 trillion per year, and this debt grows by another trillion every 5 months. What keeps this system standing? Trust. Everyone believes the dollar will maintain its value. Everyone believes the U.S. will pay its debt. Everyone believes the Federal Reserve will manage any crisis. But what if this trust is shaken? In 2023, Fitch Ratings downgraded America's credit rating. The reason? Rising debt and constantly recurring budget crises. This means none of the 3 major rating agencies now give the U.S. the highest rating. According to Federal Reserve data from 1999 to 2024, the dollar's share of global reserves dropped from over 70% to 58%. In the same period, the ratio of U.S. debt to GDP jumped from 38% to 120%. Not a coincidence. Now let's get to the critical question. Why is this system fragile, and what happens if it breaks? The BRICS bloc, meaning Brazil, Russia, India, China, and South Africa, has been seeking an alternative to the dollar for years. At the 2024 Kazan summit, Putin waved a prototype of a BRICS banknote in his hand. Saudi Arabia's joining the bloc shook the foundations of the petrodollar system. The numbers are clear. BRICS countries now make up 37.9% of global GDP. G7 countries have fallen to 27.8%. China and Russia conduct most of their bilateral trade in yuan and rubles. In 2023, 20% of world oil trade was conducted in non-dollar currencies. But the real threat isn't de-dollarization. The real threat is the inherent fragility of the shadow banking system. The Eurodollar market is an area where the Federal Reserve can't directly intervene. We saw in 2008. When this market collapsed, central banks had to scramble to catch up. All of the Fed's interventions, TAF auctions, currency swaps, commercial paper programs, none of them could fully rescue the shadow markets. The system runs on trust, but trust evaporates at the moment it's needed most. What's called a liquidity crunch is exactly this. When everyone wants to withdraw their money at the same time, there is no money, because the Eurodollar is already a leveraged version of existing money. When a liquidity crunch happens, this leverage reverses. Trillions evaporate. What does this mean for America? The first and most direct effect is on interest rates. If foreign investors lose confidence in U.S. Treasury bonds, the Treasury must offer higher interest rates. This increases the government's borrowing costs. When annual interest payments have already reached $1 trillion, this means that figure could multiply. The second effect is inflation. When the dollar weakens, imported goods become more expensive. America is a consuming nation. It imports electronics from China, machinery from Europe, energy from all over the world. A declining dollar means the erosion of the American people's purchasing power. If you also think inflation isn't just an economic figure, but theft from your pocket, subscribe to the channel, because here we only speak the truth. The third effect is systemic risk. American pension funds, insurance companies, municipal bonds, all are tied to this system. Mortgage rates are indexed to reference rates, like SOFR. A crisis affects everything from an ordinary American's home to their retirement income. And perhaps most importantly, geopolitical power. The dollar being the global reserve currency gives America a tremendous advantage. Sanctions power, control over the SWIFT system, the capacity to economically isolate enemies. When you sanction Russia, you do it through your dominance over the dollar system. When you exclude Iran from the financial system, you use this power. But every sanction pushes others to seek alternatives. It's clearly stated in the Hudson Institute's 2025 report. BRICS may not have the capacity to displace the dollar, but it can provide political ground and institutional form for neutrality against the dollar. So the problem isn't the dollar collapsing overnight. The problem is its slow erosion. And this erosion? Power wars are no longer fought with armies, but with monetary systems. Borders are no longer drawn with land, but with SWIFT codes. And the future of the dollar isn't being determined on Capitol Hill in Washington, but at tables in London, at stock exchanges in Shanghai, at summits in Kazan. What you thought was collapse has already begun in the shadows. The question is, will you be ready when it fully emerges? The second layer of this system, meaning central banks' digital currency plans and their potential effects on your freedoms, is an even more dangerous story. I'll tell that one in the next video.